Good morning, ladies and gentlemen. This is Greg Michalowski from FXCD, and this is a Tuesday, March 16, 2010 New York Opening Forex Report. Let me remind everybody that trading Forex is risky. It should all be done with risk capital. Now change your lifestyle. Traders can lose all their risk capital trading Forex. FXCD does not guarantee any recommendations made within this commentary. Traders can make a market assessment and take trading position based on their own personal market analysis for its tolerance and financial condition. And indications care should be made to use leverage as with your personal risk tolerance. Although the care was taken in creating the sport, FXCD does not guarantee the accuracy of the information. While we are seeing some action here in the euro, we've had an up and down day. Initially, the market, well, that was a down and then up and then down, and now an up day. We did have better economic data coming out of the ZEW survey of economic sentiment out of Germany that rose to 44.5 versus a 43.5. That caused a spike back to the upside here in the euro versus US dollar. The current price trading at 137.0810 in that market. That's above some resistance levels that we had at 136.91 in particular, and I'm also back above the 100-hour moving average. This 100-hour moving average comes in 136.86 currently at the moment. The other thing of significance is the holding of these 200 par moving average here. The market went down and tested that level twice during the trading session. Also tested the 38.2% retracement of the move up from the March low to the March high. And this is also the range over the last 3 or 4 weeks now for the euro versus US dollar, and that also of significance as the market continues to kind of inch higher here, trying to find a trend to the upside for this currency pair. So that's also positive. And currently the market trade at 137.10. The other key level would be this old high here at 137.04. You can see how the market stalled at the level and then moved higher off of not only this 91 level, this 04 level as well during this period on Friday, and that propelled the market to the upside. So it looks like the bias is again moving back toward this area up here, which comes in at 137.96. That was the old high, but in between there, we're going to have to get through this 35 level here today. It's going to be a key level on the top side. That was an old high going back to March 3rd period, and we're going to have to get through that level. And you can see how that level also was a level of support here until the market gave way to the downside and on this corrective move down to the 38.2% retracement level. So let's look for support against the 91 level, maybe even against the 04 level in the early New York trading here today. See if it can hold that level here and move higher from that level. Otherwise, we're going to be watching 136.91 after this move back. That took the price back up to above the 137.10 level, and so we'll see how that support holds here today, and if so, we should see a target up here at the 137.35 level, and could do further damage to the upside. It is Tuesday, looking to extend the trading range, or at least take a look at what we saw yesterday as our high prices from yesterday at this area up here. Let's take a look at the sterling versus US dollar. I commented how that currency pair was initially hurt today. This was hurt on the back of a EU report saying that they should do something about their deficit. The UK deficit is projected to be in 2011 over 12%. This is worse than Ireland. This is worse than Greece. This is worse than the US. This is worse than Japan, France, Portugal, Spain, and Eurozone combined. So what's the benefit of having the pound? And that's what caused this move to the downside. But we did get this sharp move back to the upside. In fact, the market moved back above these converging two moving averages, and that helped propel the market to even higher highs. So that's those two moving averages come at the 150.52 level. It's also the area of the 38.2% retracement of this range that we've been seeing here from the March low to the March high. So we broke through that level, and the market is, as you can see, moving higher in response to the euro going higher and the dollar in effect going lower against a lot of these currency pairs, and so we are seeing this bid in the sterling versus US dollar. Taking a look at the 5-minute chart, we are in this very narrow trading range here for most of the trading day, and then boom, right to the downside. This is off that report and that force the market to the downside, and then we get this sharp move back to the upside here. This is not fun, folks. So we get it back, but everyone realizes that you have a nice profit into a trade and then have it come right back into your face. The market did get it back above the 100 and the 200 bar moving average in this 5-minute chart, moving higher. Now we're at the 61.8% retracement of this last move from yesterday's high to the low, testing the 61.8% retracement. Looking back at yesterday's trade, we did have some support initially during the day at around the 151.51 level, so we'll be looking for resistance up against that level, but we are currently finding resistance at the 151.19 level. Down below we do have support at 150.92. That's the midpoint of this week's trading range. We'll be watching that level. If we're able to get breakthrough that level, then look for the market to move back toward this area in here, where the market had the initial highs for the day, and then also at this 150.52 level, which is where the 100 and the 200 bar moving average on the 5-minute chart currently come in. So right now, it looks like resistance up here at 151.19. We're going to have additional resistance up here in this area right here between 44 and 51, and look for support down here at the 50.64 level if the market should go down in that direction. The dollar versus yen, we were talking about the 100-day moving average at yesterday's closing level. That currently comes in at 90.11. Low actually got through there at 89.98. Let's look at that more closely on the 5-minute chart. I put in a line here at the 90.11. You can see how the market was selling off here into the opening here in Tokyo, maintaining the resistance against the 100 bar moving average on this 5-minute chart, while we gained momentum to the downside, and we had a low here that came in at 90, looks like around 13, and the market bounced off of that level, so we did find the support against 90.11. The market bounced, but then it could not moved up to around the 28 level, and then fell through the 90.11 area, using it as resistance. And once we got back through it, it was back off to the races. Went through the 100, when it came up to the 200, and went through the 200. Now currently trading back at 90.66. So it seemed like the market had another successful test of this daily 100-day moving average here. Moving back higher. In fact, we're back up on the day for the dollar versus yen. So where do we stand? The levels that I think will be of importance are the close from yesterday. The close from yesterday came in at the 90.51 level, currently trading at 90.66. So we'll be watching that level. You can just watch this 38.2% retracement, or put in a horizontal line at 90.51 level to remind you that that is indeed where the closing level should be. And you can see how the market came up to that level and then moved back through the level. Another thing you may want to do is just put a Fibonacci from today's low to today's high, assuming that this is going to be high, which we don't know, but is to move this along as the market continues to move higher, and look for support against the 90.41 level. 38.2%, 50% comes in at 90.33. That also is a key level here from looking at this consolidation period from yesterday afternoon, or these lows from yesterday afternoon. So we'll be watching for support down there. Let's go on to the dollar versus Canada. If we take a look at this chart, we were looking at this underside of the trend line here, this old trend line here. We also were looking at the 100-hour moving average yesterday. Yesterday we came up and tested that moving average. Today we didn't get so close. That moving average currently comes at 102.20. That's the good news. The market is moving down, so it has less of a hurdle to get through the upside, but it still has not been able to make a meaningful breach of that during this sort of consolidation down type trend here. The other thing of note is here that we haven't been below the 200 or above the 200-hour moving average on a closing basis since going back to March 1st. So that is a significance as well. This is the green line in this chart here. So we have the 102.19 level on the top side. That's being our current 100-hour moving average, but the price is currently down near the lows. 101.55 was the low level that we saw on Friday, and that really seems like the target on the downside here. We may also watch this 101.83 level. If we get back above that trend line here today. We should see further break to the upside. Now, as far as economic calendar goes, here today we do have import prices out of the U.S. at 8:30. Expectations are minus 0.2. We have housing starts coming out at 8:30 as well. The expectations are 570,000 versus 591. That's down. Housing starts month on month. That comes out to minus 3.6. But the prior month can be revised, so be careful with that. Building permits are supposed to show a fall to 601 from 621 or 622 last month, and the FOMC rate decision later on this afternoon. Expectations of unchanged. We'll be looking for whether they the wording. Do they expect to keep rates tight for an extended period of time? That's my morning report. We'll talk to you later. Bye bye.